Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 18th of March. All right, now as we come into the Australasian session, some sort of weird, kooky things happening now. The main theme here is, okay, so US equities, Wall Street stocks, and oil prices rise after aggressive Fed hike outlook. Now, the oil still revolves around the oil supply or the oil shortage, based around the whole Russian issue. Now, Wall Street stocks rally on after aggressive Fed outlook. That just doesn't make sense, right? To me, it's sort of the opposite, because if the Fed raises interest rates aggressively, right, people pull their money out of the stock market and they start to cover up their debt holes. So that doesn't really float with me. And I had a good question there from Lee today, and it's sort of, I can see the weird picture that we've got here. We've come out this week. The Fed FOMC meeting was the key to it. Hike rates, very aggressive, sort of hawkish tone. The Bank of England have raised rates, not so aggressive. ECB have come out and said basically they've got still room to move before they start raising rates. So you think the dollar would be higher, and with those Fed rate hikes, these would be lower. To me, it's almost like a market correction, right? This doesn't make at all sense. So give it a day and we'll see how it sort of unfolds. The key to it is here, the US equity futures coming in lower, right? That sort of makes a bit more sense, maybe correcting that bit of that move. And it may be just a bit of a rebalance of the US equity markets, because they have been getting hammered of late. So, but this, with the US equity futures coming off, you'd think that would be a bit of a reversal of the risk on, risk off profile. Okay, so risk on during the US day sees Euro, Sterling, Aussie, Kiwi pop to the top side. You just got to go with that regardless of what the fundamentals are doing. But this sort of correction here at the moment in the Asian session, where US equity futures are coming off, you'd think that would sort of turn the Euro, Sterling, Aussie down and send the dollar up. But we're not really seeing that, right? That tells me there's some major discombobulation in the markets at the moment. And when you don't see, I mean, you may see things lining up or not. To me, more of a traditional, background and doing this for 30 years, I don't like it when the picture doesn't match up with what's going on, right? I mean, it just doesn't sort of float with me that well that the currencies of the dollar and the interest rate cycle isn't doing the right thing with the equity markets. So let me just come over here, just have a look at the charts and see where everything is. Okay, the dollar index, well, it really hasn't gone anywhere. Okay, but the real surprising factor here, after the Fed, right, they've said they're going to be, potentially raising interest rates, the ECB a little bit more neutral. We're still testing this resistance line, okay, and it's like there's a bit of a stop loss run over the last sort of day or so. Now it's just sort of starting to edge higher, and I'm sort of starting to weigh up what's going on. Like the global equity markets have had a bit of a reprieve. I don't think that's the negative story's over just yet. Euro is the big question mark. What's going on? To me, it should be heading south, right? That doesn't mean I go in and get short here. I start to question why it's not going down, right? That's one part of it. And I will wait to get into the trade when it does start to show signs of weakness. On the daily charts, still not overbought, and that's one of those things. The key part to me, I'm looking at this across the board, right? And the volatility index is just back to 25, right? So that tells me the market is very comfortable or becoming extremely desensitized to the Russian-Ukraine issue, right? And that is, they're comfortable with the whole risk profile of what's going on. We're going to see how things pan out from there. Now, oil on a daily basis did tweak the trend line here, but then sort of come back to 104. Maybe some unfinished business. They were trying to push it down, but it just won't go just yet. Someone's either manipulating oil, which is either OPEC or someone else, or we'll have to see how that plays out. And obviously gold, just keep an eye on this. Gold is basically following oil very closely. And even though Bitcoin is under the 200-day moving average, it still looks like it's found a bit of a home and continues to trade sideways. The real surprising aspect for me is the equity markets, right? Now, let me just change the color of that because it doesn't sort of show up very well. Like the NASDAQ has picked itself up off the floor and the S&P 500 sort of held that 200-day moving average. The NASDAQ's just popped above it. Is that enough to sort of convince me that it's going up? I don't know, but I tell you what, that's a pretty decent move back above that level. If there are future Fed rate hikes, these things are going down, right? To me, it's almost looking for better levels to get short. So that's something for those traders trading equity indices to keep an eye on. All right, just a quick flick through the other major pairs. The dollar up basically against the safe havens, the Swiss and the yen. The dollar, well, dollar CAD's getting pulled all over the place. And with that recent, bit of weakness in oil as it was falling back, back down towards that sort of $90 level, we did see a little spike in dollar CAD, but it's not enough to keep it going at this point. You've got euro right at the crossroads. I think there might be a few more stops here, but still, I'm very happy and confident and happy to be looking to get short euro on the next sort of spike, right? I want to see it really flush out the stops if they haven't all been triggered so far. And that tells me I just like it, because there's nothing really to cheer about in Europe at this point, especially with the positive or hawkish Fed stance. Sterling, well, that's down in the doldrums, and that's mainly connected with the whole Russian-Ukraine situation. Aussie and Kiwi, I tell you, they are just cruising as though nothing is going on. I can tell you the economies aren't really rocking the house, so you'd expect those things to come into focus once Europe calms down. All right, that's pretty much the way of it. So when you come back and you start looking at the overall markets, try and factor in, right? We do have some fundamentals coming out, but you know what? They're not the key thing that traders are looking for, right? This major movement in the US equity markets, obviously down just at the moment, but looking at yesterday, they had a nice little reprieve. You're waiting to sort of connect the dots here and see if it starts to impact the currencies in a rational format, right? And then also, you can be looking at commodities, safe havens, and everything else for that matter, right? You got to make sure everything fits into place. If you are looking for some late action, are the BOJ going to do anything? I wouldn't think so, right? I can't see them doing anything almost ever. You come down, and that's pretty much where the week ends. You got some existing house numbers. I don't see the Canadian numbers or the US numbers there really impacting, right? The market's still deciphering what's happened with following the FOMC, and it's a bit of a repositioning, right? Flushing out of some stale long positions in the dollar, right? Repositioning and looking forward to the following week, where we've got a fresh round of data. You get those big central bank meetings out of the way. Hopefully the markets start to connect with what the core fundamental backdrop is. If it doesn't, well, that's a bit of a sign to sort of sit on the sidelines and wait and see what happens. But that's where we are, guys. If anything, the most intriguing currency or instrument at the moment to me is euro. You can see it hasn't finished here. This is the hourly charts. It's still sort of tweaking higher. Here's a great level to be getting short, obviously, but that's like, what, 300 points away. You'd be scratching your head if you're waiting for that. But stranger things have happened. Keep an eye on it. I still like euro down, but we don't have a level at the moment, and it doesn't make a bit of sense. So you sit back and wait. All right, guys, have a good one. All the best. Cheerio.